Hey traders, Cousin Vinny coming to you on the 16th of June, Father's Day, with a read of the tea leaves for the summer and the week ahead. The spiders continue to be in this uptrend that we've seen hold since the low in November. We've seen action along this descending trend line containing the highs, and we have these fib levels from the pivots at 169.07 at the high and 160.25 on the lows. Many people were talking about the gap down here as well as 160 on the spiders and 1600 on the SPX, and because so many eyes were on that, you would think that's one of the reasons why bears got taken aback when we had this move on Thursday. We did retrace a little bit into Thursday's candle, which was completely expected, and we are watching for some signs that perhaps we'll get a direction one way or another as the summer grows and seasonality takes effect. We'll take a look at the spider sectors and a few other things. First, the 20-year bond, we had a reversal candle on Tuesday that outfoxed a lot of people. We had this low and then an engulfing candle. The next day we had a red candle, and then we saw a move higher on Thursday and a shooting star on Friday. We're still oversold, and we still haven't seen a confirmed move one way or another. We do have a crossover here of the 1030. If you follow me on the box setup, we have tested that zone. And if we look at the IEF, the 7-10-year bond ETF, we can see that this low of this range that we bounced around inside of for most of the year, we broke down and we retested on Friday. So I'll be curious to see what happens here with this crossover and the descending moving averages coming into the week. Looking at XLU, we all know now that the Fed's been talking about tapering QE, and housing, bonds, emerging market bonds in particular, utilities, REITs, and treasuries all got smacked May through June. We have this support zone here, taking these pivot points. We came down to the 50% level, this zone here, and this high that we put in October, November. Real estate, the IYR, we can see the same thing. We came down to this zone here between the 50 and the 618. We overshot the 618 pivots from November to these highs, and we saw this move lower. Now we're starting to see some firming in these shares and components. Looking at the offensive sectors, XLF, XLI, XLK, and XLY, let's take a look at a read of this. We can see that since the November low that we've held this uptrend, and now we're flagging in a very constructive bullish pattern, a descending channel, where we could very well either test this lower trend line or break higher from here. Note that the 10 EMA is moving sideways and the 30 moving average is holding price action with the 50 period down here below. Let's turn on the 50 period. And we can see where the Fibonacci's are. We haven't yet got down to the 382, but if we take this more recent pivot rather than the November pivot, right here in mid-April, we can see that we came down and tested the 382. Looking at XLI, we can see the same thing. We have a higher low here where this particular past week has seen action where we've seen lower highs and higher lows, And we're in a bit of a decision point right here with the 10 period and 30 period right at this level, as well as the 50 period moving average, where the Thursday we came down and almost tested that. Okay, if we look at the recent pivots and the Fibonacci's, we can see where we came down and tested the 382 as well on Thursday. Also note where stochastics is and volume. We see a descending volume here on this move lower. XLK, we see more of a flag pattern here. Right at the 382, and we did come down and touch the 50 period moving average. That's the EMA. And stochastics is moving sideways. Also note the 10 period that the prices have been closing at below or right at the 10 period EMA and just below the 30 period. But we are above the 50 period moving average. The consumer discretionary XLY is more indicative for the most part as far as sectors are concerned, the overall trend of the market. We did come down and test the 50 period several times, 4 times to be exact. We held the 50 Fibonacci level, and we are seeing more of a higher low here as well, and these highs being contained by this descending trend line. And starting with the November lows, you can see where we are currently. Continuing to hold this major uptrend with stochastics bouncing off the oversold condition. We see some red bars here on the selling, but we are descending for the most part. We'll have to watch and see what happens on the following sectors, the defensive sectors, where we've seen some action of late to determine which direction we're going. Back to the defensive sectors, XLU, XLV, XLP. XLU, remember we had this crossover, and if you follow my box technique, we had a first test of that level, and you could have traded this to the downside. We bounced off the 50% level, this zone here, previous resistance support, and we're bouncing. So we need to keep an eye on XLU. We've seen some buying in here and need to keep an eye on this going into the week. In particular, I would watch for these highs right in here for a break above same. We bounced off of that on Friday and we got rejected by the bulls going into the end of the day. XLV, we're watching these the price action here with this descending price action and higher low here, as well as this level right in here, to see whether or not we get a test and a breakout above this trend line, or if we get rejected and move lower. Note where stochastics is, and we had a really nice uptrend here. And a note back here where Einhorn was talking 10-2-12 about the uncertainty and then space creates opportunity with HMOs. We liked right here, we liked Lilly, Pfizer, Merck, and Bristol Myers, and we can see what trend we saw over the following 6 months. So healthcare is holding up a bit better. We do see fib levels here that have been yet to be tested, the 382. I mean, there's very likely possibility we could turn over and move down, though with seasonality you would think that this would continue to move higher. So we really don't know which direction this is going to go. We don't have a crystal ball. All we can do is watch price action and note where stochastics is at present, as well as with XLU and XLP. XLP, note that we came down, but we didn't test the 382 level. We have the same pattern here with higher lows, okay, and we have this price action contained up here at these highs around 42.25 or so. Stochastics is grinding higher, so consumer staples will be one to watch as well, with the 30 period containing price currently and the 50 period right in that vicinity. Watch your 10 period EMA going into the week. Energy and basic materials are also seeing the same pattern, descending channel, so keep an eye on this, as well as XLB and the steel sector, which is a component of the bigger materials sector. XLB is in this nice descending pattern as well, so I'll be watching for this week for some signals. Not expecting a whole lot, being it is a week away from the start of summer, so stochastics is oversold and grinding higher, and not much to see on the volume side. We do have a level here that we're managing to hold. So we have this double bottom pattern. We broke out, we came back, we're retesting it. This is a bullish continuation pattern, so we'll watch to see what happens with the 10 period and the 30 period. The 50 period EMA is down here, and we held price on Thursday, Friday. Okay, so this is Cousin Vinny coming to you from Day Trader Bootcamp, as well as the closing print, where I do post quite a bit of information here. I'm going to probably make a section here where I have my watch list for the week, so you can check that out during the week instead of posting it in a video format. Also, for you newer traders, there's a lot of good information here on technical analysis, learning chart patterns, and the strategies that I use to trade the markets. Okay, so that's closingprint.com. I hope this helps. Come and check us out in the room, and we'll talk to you on Monday. Take care.